Okay, it's 6:30, so we're going to go ahead and get started. Again, thanks and welcome to my very first virtual home buying seminar. My name is Wermerskirchen. I am broker owner of the W Real Estate Group Metro Brokers. And this month, I have been helping people buy and sell homes now for 24 years. And this month, very appropriate, is the National Home Buying Month. So welcome. Please realize that the facts that I'm going to be sharing with you tonight are very general. There are many lenders that are out there, and there's just as many programs for mortgages that you can purchase. So I can't go into detail of all those, and so this is just going to be a general overview of some of the most asked questions and maybe some mistakes people have made or thinking about when they're deciding to purchase a home. I want to let you know that Valerie Collinsworth, who is helping me tonight, she's behind the scenes and she has some things in the chat for you, some links for you to look at later when we get done with the seminar. If there's something that you would like to visit more about, we've got a link there for you to schedule a 15-minute consultation with us. So while I'm going through the presentation, as you know that we won't have any talking from anybody, but we'll be able to use the chat. And at the end, we should have time and we can go through some of those chats and see if I can answer some of those questions. We are recording this, and I believe we'll be able to send that out as well when this is finished. So we'll get started. So I am a realtor. I want to add that here. There's the slide I wanted. So this is the realtor, the big R, and the realtor in capital letters. What, in case you didn't know what that stands for, is that means that I do have a license here in Colorado along with people that are real estate agents. So there is a difference between a realtor with a capital R and a real estate agent. And that difference is that realtors work under a code of ethics. There are 17 practices that we consider under that ethics, and so if the public or even a fellow realtor has a problem with something I've done, they are able to file a claim against that ethics practice that people could not be ethical about. Also, I'm required under license law to let you know that there are 3 ways that you can go into a relationship with a realtor in the state of Colorado, and that is a buyer's agent, a listing agent, or a transaction broker. I won't be going into the definitions of all those because this seminar is strictly for information and I'm not asking you to be a client or a customer. So, the 5 myths about buying a home. So this is about the very first step, and that is getting pre-approved. So when you go to purchase a home and you write an offer, the first thing the listing agent is going to want to know if you have a pre-approval letter. So that's what we're going to talk about, those myths about getting that loan. If you're not fully approved and you don't have a letter, they're just not even going to look at your offer. So the very first myth is you must have 20% down, and that's just that if you do put 20% down, then you don't have to pay private mortgage insurance. So, but there are programs out there that you don't have to have that 20% down. There are 3 basic loan types. There is a conventional note, there is a Federal Housing Authority note, that's FHA, or a Veterans Administration loan, and that is also known as VA. So the lowest down payment on a conventional note is typically 5%. On an FHA note, it is 3.5%. Now, if at least one person that's getting the mortgage has never owned a home before or has never owned a home within the last 3 years, with a conventional note, you can go down as low as 3% on the down payment. There are many different grant programs that help you with assistance for your down payment. Some of those have gone away, and with the COVID, a lot of those changes have happened. So at the time that you do apply, if that's something that you want help with, we can look and see what programs are available. With a VA loan, they don't look at the credit as much. Let me go to the next slide. So you must have a perfect credit score. With the VA loan, they don't look at it as much, but before COVID, your minimum credit score for most loans was 580, and that minimum is now 620. If you had a bankruptcy, you would have to wait 2 years after it closes for a conventional and 4 years for an FHA. So all the lenders I work with have the ability to help you improve your credit score. And so I ask you, beg you, do not use one of the credit repair companies. They charge you a percentage, and almost every lender that I work with can help you work through improving your credit score. So I do have to tell you, and I got one of my clients' permission to share with you. So he just closed last month. When we started talking, he had a credit score that was less than 550. Then after he and I started talking, he's talked to a lender, he got it to 597. And then within 3 months, the day we closed, he looked at his credit score and it was 719. So you don't have to do a lot to improve your credit score, but you have to do some very specific things that get that credit score higher. So always, you may think that you know what's going on, but those lenders, they know exactly what you need to do to get those credit scores higher. And your credit score does affect what your interest rate is going to be. So the higher your credit score, the lower your interest rate probably will be. Now is a bad time to buy a home, is myth number 3. Well, a number of my colleagues have told me that their buyers are waiting for our housing market to slow down. And I just, in the last 10 years, the market in Colorado has not slowed down. Our interest rate is a lot lower, but the market, so far as the appreciation in homes, has not slowed down. So I want to show you a few slides. So people are saying, you know, that with our pandemic, that we're going into a recession. And I want to remind you that we're in this recession was caused by a pandemic, not housing. So a lot of people are comparing this to our housing recession in 2008. Well, just to remind you that prior to 2008, if you wanted to get a mortgage, as long as you could fog a mirror, you didn't have to prove that you had income. And of course, today you do. They verify your employment up to the day of closing now. They didn't back then. So that caused quite a debacle before 2008. Well, since that happened, trust me, it is a lot. It is a lot of work, and it takes a lot of time and a lot of paperwork to be able to prove that you can afford a loan. So we're not in that kind of bubble. And as you can see, during the last 5 recessions, there's only been 2, and of course 2008 was the biggest, where the housing price changed. This next slide just shows the annual home price appreciation after the crashes. And to let you know what the economists are saying now, that we're probably still going to see an average appreciation that's somewhere between 4 and 6%. They're saying, and then this next slide will show you that the gross domestic product forecast is showing that the 3rd and 4th quarter it's going to increase. Now, the gross domestic product is a good way to measure a country's standard of living, since it can tell the average dollar value of all products and services a person purchases. So basically it's saying if the gross domestic product is going up, all is well with the economy, and if the GDP is going down, all is not so well with our economy. Now, so far as, let's see this next slide. Oh, let me go back for a second. So let's talk a little bit more about if it's a good time to buy. So I also have some clients that purchased a home in 2014 for $283,000. That home today is valued at $482,000. So that's what, 6 years, in 6 years. So if they needed to refi, to pull cash out to help pay down debt, if it's to, you know, send kids to college, whatever it may be, they have that ability to do that. And now, taking out a higher amount with the cash out, with a lower interest rate, their payments could possibly be about the same, if not lower. So when you stop and you think, okay, I want to wait until the prices go down. Well, if the interest rate is up, you could be in the same situation that you are right now today, but you're paying more interest on the home in the long run. You should purchase a home at the top end of your pre-approval. So a lot of people go out and they'll get the pre-approval for the loan. And then that pre-approval tells them what their purchase price can be. Now, some people, their purchase price could be, say $500,000, and they look at the monthly payment and they're like, there's no way we're going to spend that much money on a monthly payment. We want to, go travel. We want to have some fun, whatever it may be. We don't want to be tied just to our house. So remember, when you do talk to the lender, what you're pre-approved at, you want to make sure that you want to make those payments each month. Lately, probably the last 2 or 3 years, we've seen a lot of people, buyers that get under contract, and they really haven't done that work with their lender before they wrote that offer. And I know it's a lot of fun to go out and look at houses and get excited, but they go in and then they realize once they get under contract that there's no way they want to pay that monthly payment, and they terminate the contract under one of their contingencies because of that. So it's just, I can't stress enough how important it is to spend that time at the very beginning before you purchase a home with a lender and make sure you really understand what this is all about, because this is like one of the largest purchases of your life. And so we want to make sure that that it's good, that the house that you're buying is in 5 or 7 years or whatever it may be, that when you go to sell it, that you're gaining, that you have equity in the home, and that you made some money on this investment. And number 5, it's cheaper to buy a fixer-upper. Well, it's just simply not so. I mean, I like the HGTV shows. I like to watch them. I don't watch them a lot, but the brothers and some of the others that go and do fixer-uppers, remember, it is a show. And I have to tell you that I have a lot of couples that come into a house, and one of them is like, oh yeah, let's tear down that wall, and we're going to redo this, and we're going to take all this out, and the other one's got his eyes look like deer in the headlights, like, holy cow, what am I getting myself into? So if you're handy and you know how to do a lot of that stuff on your own, I think that's a great way to go, and you understand that it's not something that you go in and it's done in 6 hours. It takes time and money to get all that done. So, and always remember, it's still the number one is location, location, location. So I have had clients in the past that, have love the house, and it was beautiful and it was a great price, but it did back to a 6-lane, highway, and cars are going 75 miles an hour. And I'm like, is it, you said you wanted to live outside, that you love your backyard, you love to relax. And to me, I think me personally, it would be hard to relax in a backyard when you got cars, zooming by you. So location is still, the number one thing there. So please remember that you can put your comments, questions, whatever in the chat. And when we're done, then we can look at those and see if I can answer some of those questions. So now we are going to the 3 bonus myths. The first one is you should choose the lender with the lowest advertised interest rate. This is it's kind of funny. It's kind of like when you see the new build and they say, starting at 400, and you walk in there, and once you put a garage, your kitchen sink and maybe a roof on the house. I mean, I'm just exaggerating, but now instead of 400,000, now the house is 475,000. Well, it's kind of like these lowest advertised interest rates. So that's bait and switch, bait and hook, whatever it is. They want you to see that, so then you call them and you're thinking that you're getting this great interest rate, but what they fail to tell you in the little tiny fine print, kind of like when you go to buy a car, you have to have so much, your credit has to be this, you have to make this much money. I mean, it's all kinds of things that they didn't say that's what you have to get that interest rate. So, you have an interest rate, and then you have an APR, the annual percentage rate. And that annual percentage rate is really going to tell you, or your average percentage rate is really going to tell you what it costs you to get that money. So again, those are things that talking with your realtor and talking with the lender to really make sure you understand all those little details. It's cheaper to rent than own. So I do manage 36 doors for friends of mine and clients that have homes. And this next slide will probably show you. So the cost of renting versus buying. So I don't usually like reading slides, but I'm going to read this one. So historically, the percentage of income needed to afford a median rent was 25.8%, and that's gone up to 28.4%. And the percentage of income needed to afford median home was 21% historically, and now it's gone down to 17.5%. So again, you know, if you think that renting versus buying, just go back to my client of mine who bought the home back in 2014 or 13, and now what the equity that they had in it. So, you know, really buying is a good savings. I mean, it's a great backup if you need it, you know, later on down the road. And, you know, like this says, if you're going to pay a mortgage, you know, you might as well pay a mortgage for yourself. So, and then last one is you can't buy a home if you have student loan debt. I just want to make sure. Okay, so a lot of people ask this, and it has been in the past. They thought that if they had student loan debt that they couldn't purchase a home. So when you go to talk to the lender, the first thing they're going to look at is all of the debt for your home. That includes cars, your student loan debt, your credit cards, maybe some medical bills. All those bills together, they add that up, and it's all at the minimum. You may pay more for some of your credit cards, but they look at the minimum payment that's due on all those. They add that up, and then they take that and look at that against your income. If you're over 45% with that debt, including the student loan debt, you're going to have to work on getting some of that debt down, because I think if I'm talking to the lenders before this, if I was doing this today, 45% is really kind of like a catch-all for all of them. If your debt is more than 45%, it's going to be real difficult for you to get a loan. So you can buy a house even when you have student loan debt. So that ends the seminar for right now. I wanted to let you know that we do have a couple of links in the chat, which I'm going to see if I can open up here. I can get this figured out. Okay. So we have the links for the app for RE Colorado. RE Colorado just put out, I'm so excited, this app for you to be able to be wherever you're at. It's really convenient for you to sit down and, like, if you drove home and you saw a house that was for sale and you were curious what it looked like inside, what they're asking for it, you can just use this app, put that address in, and it comes right up. So it's very convenient for you. And then again, if you have any questions and you want to have more of a consultation with me, we can do a 15-minute consultation, and Valerie has that link in the chat as well. And then also we do have our buyer's book, and that will be my next seminar. Our real estate contract has 21 pages to it, and every paragraph, you know, needs to be gone through. So it would be, that's what I'm going to do at the next seminar, not go through all 21 pages, but at least give you an idea as to when you get under contract, what are the next steps? What's earnest money? What's title? Why do I need an inspection? Things like that. So I want to thank you again for joining us tonight, and hope that this was informative. That was the main thing I wanted to do, is inform you and get you aware of some of those myths that are out there and what the truth is. So thank you for joining, and again, contact me please if you have any other questions.